Joining us live is one of the key players in that deal. His name is Angelo Rufino. He is partner over at Bain Capital, also the firm's head of special solutions in North America and head of corporate special situations in Europe. And he's sitting right next to me. Hi, Angelo.
Hi, Katie.
So let's talk first about this joint venture that you formed with OpenAI and a few others. Just talk us through how it came together and what Bain hopes to get out of it.
Sure. Well, this was many months of negotiations, of partnerships with other great institutions, as you noted. It was specifically centered around AI entering the adoption phase. So we all know that it's been in an experimentation phase for quite some time now, but we are seeing more and more of our portfolio companies and clients wanting to understand how to take data, disparate data in their organizations, bring it together with agentic tools to really create economic gains from that. And so a real great opportunity here to build a company that we believe in, we think will be a fantastic success with just a leading player in the space.
And so how do you think about returns on this investment? What is the thought process there, and how does that differ, or is it similar to some of the other investments that you make?
Well, it's similar in many ways. We always think first and foremost about returns on capital and returns for our investors. In this case, it was all about sizing the TAM, which is tremendous. The TAM for deployment into corporates, large corporates that is really almost endless when you think about the type of solutions that are going to be able to be brought to the corporate sphere. So on this, it was all about sizing that TAM, putting a really clear plan together to execute upon it, and ensuring that we surrounded ourselves with excellent players who could both bring companies that could use this and a great partner like OpenAI to execute on it.
Well, broadening the conversation a little bit, I do want to talk a bit about asset-based finance, because it's something that you highlight in your note. And Romain Bossack and I were at the Milken conference last week, and it was one of the buzzwords out there. There's a lot of excitement around asset-based finance at this moment, and I wonder why. I mean, where is that enthusiasm coming from at this specific moment?
Well, it's a great question. What we do at the core of our business is corporate solutions and asset-based solutions, so very much to what you're referring to here. And I think asset-based as an asset class is really following what we've seen corporate lending really work through over the last few years. And that was a degrossing of bank balance sheets where that lending started moving into private hands. So when you think about asset-based as a credit asset class, it's following the same trend. We are seeing those bank balance sheets degrossing. It is moving into private hands. And the TAM for this, again, I'm talking a lot about TAMs here, but it's just tremendous.
This is the program to do it on.
Yeah, it's trillions of dollars of assets that span all forms of cash-generating hard assets. And so when you think about it from the perspective of an investor, we can touch something that is a tangible hard asset where you have a direct claim to it. It throws off substantial cash, it amortizes highly, and it allows for a really differentiated and oftentimes uncorrelated return stream versus corporates.
Well, give us some examples. When you think about those trillions of dollars, that big TAM that's out there, I mean, where specifically are you seeing the opportunities right now?
So they're varied and numerous across the board, but one of the things I know that you all have reported on is our partnership with Warner Music. Royalties and specific music royalties have become a staple of the asset-based finance community. A long-duration asset that has pricing power associated with it, iconic artists backing it, and we put together another joint venture here, a real opportunity to provide a large-scale corporate capital solution to Warner Music to help them grow their ability to acquire catalog. And we see this as a really long-duration, 50 to 70-year asset class with pricing power. You can see that the whole industry around catalog acquisition has gotten tons of interest just this week. Sony buying Recognition, we had BMG buying Concord, so massive consolidation occurring in an asset class that I think will continue institutionalizing and proving to deliver returns for investors, but also provide great value to the artists who are partnering with us.
Well, to that point, when it comes to music specifically, when you think about royalties, when you think about catalogs, I mean, how competitive is that space right now, and how does that compare to even just a couple of years ago?
Sure. So it's changed a lot. Over the last 6 or 7 years, it's moved from a cottage industry that had a few players that were really doing this in and of themselves in smaller fashions. As you've seen the markets really put high value on the IP associated with these catalogs, the larger 3 players in the space have all started to turn their attention and put a significant focus to it. So with that, of course, becomes more competition, but it makes it even more marquee to be partnered with one of the three major players. In this case, our partnership with Warner Music has already proven extremely fruitful. And that's a result of 40-plus year, in some cases, relationships with artists who's entrusted their work to an institution like Warner that now sees our joint venture as a permanent home to leave that music, to work with us, to bring it to new eardrums, new eyeballs, and really expand the reach of their art.
And Angelo, before I let you go, you have a very long title, and I want to talk about one of those points on it, because you're also the head of corporate special situations in Europe, in addition to being the head of special solutions in North America. So just give us that global perspective here. I mean, your conversations that you're having with clients in Europe, how do they differ from what's going on in North America? How are those landscapes different right now?
Well, as you know, we have a very global business. It also spans Asia, and it's very different in each region. So in Europe specifically, the companies tend to be more private focused that are seeking our bespoke solutions. We always play somewhere in between the credit landscape and the controlled buyout landscape, so filling that white space that sits in between. And in Europe, the dialogue is often with family founder-owned businesses that are looking to enter a new market. It could be cross-border, it could be coming into the US. And so we are more focused on that aspect, that sourcing hierarchy of our business. In the US, as you can see, we are right now highly focused on the large public companies who are more and more seeking this value-added capital and seeing it as a great way to drive their underlying stock prices and do things that they otherwise would have had hard abilities to access on their own.
All right, Angelo, great to get some time with you. Appreciate you coming into the studio. That is Angelo Rufino. He is a partner over at Bain Capital.